Welcome. Come on in. It's Thursday and it's happy hour. Home happy hour to be exact. So grab a drink and let's get started. Hi everybody, it's Claire Paris with Paris Group Realty, LLC. And today on our home happy hour, we're talking about what is the difference between a bank and a mortgage broker. So I have to tell you that this took me years to actually figure out, and I'll kind of put the two differences in big buckets. So the one bucket would be customer service. What do I mean by that? I mean, if you walk into, and I'm not going to name them, but you know the big three, you're going to just talk to the person, who's at the front desk, who's on the lending desk. That person doesn't know anything about lending. They don't underwrite loans. They're going to take your loan application and they're going to forward it to their underwriting department and their actual loan department. And from there, you're going to deal with probably 15 different people that are going to be all in different departments. My biggest problem with big banks is no one takes responsibility for what's going on. So you'll talk to one underwriter, they're in Minnesota, they say that they need this document, you send it, and then somebody else calls you from California and says, actually we put this up to the higher person and this person says we need something else. And then another person calls you and they need something else. And so my experience has been, you'll never get good service and they're going to change their tune often. So somebody might quote you one rate, the rate's going to change, the closing date's going to change. They have no control over anything and no one will take responsibility. Can you tell which one I prefer? So on the mortgage broker side, that's one other thing. Banks, the people that are working at the bank, they get paid regardless of whether your loan goes through or not. So they're not particularly motivated to make your experience very good, nor are they particularly motivated to get the job done. That's the big difference in the comparison between the two. So the mortgage broker doesn't actually get paid unless your loan goes through, and clearly they need you to maybe not enjoy the experience, but at least be willing to recommend them. So they're typically going to make the experience a little bit better. You're going to mostly only talk to them. They'll probably have what's called a processor, but it'll be only those two people that you talk to. And they'll typically go to bat for you. So they might go to the underwriter and say, no, we can do it for this reason, or here's this exception, and this is why you should consider them because here's a good story. That makes a big difference because most people, when they're starting the process, you think, it's fine, I'm just like everybody else, but you're not. Everyone has that one particular something that's just not right. And I don't know what it is for you. It might be, I've had people who had a medical bill from 1992 come up and it damages their credit and they have to deal with that. Or I don't know, you've only been self-employed for a year and a half, or, there's so many things. I had one where grandma gave her grandson a $1,000 check for his birthday, and it was a big to-do because he didn't normally have a $1,000 check coming from grandma, so he had to source the funds. So there's always something that comes up in the process, and there's really no way to know what that something's going to be until you get there. And so you want a team on your side that's actually going to go to bat for you, that's motivated not just by customer service, but also by money. They don't get paid unless it goes through. So that's the real big difference between the two. So yeah, there's a third box that we haven't actually talked about, which is credit unions. So my one thing that I'll tell you about credit unions is if you can get a loan through a credit union, it's probably going to be the best loan out there. So if you think about, boxes that you can put people in, credit unions only take the most perfect, smallest box, meaning they want someone who's not self-employed, ideally, who's been in their job for eternity, who makes the same exact amount of money every single month, who's never had any problems on their credit. Sometimes the loan that you're getting, they want to not just qualify you, which is a typical mortgage, they also want to qualify the property, meaning I've had some credit unions demand to get a copy of the inspection report, and then they go through it themselves and tell you what has to be done before they'll give you the loan, which is, by the way, a nightmare because most of Portland properties are 130 years old. So it just makes the loan process a little bit more complicated. But again, the pro side is they're going to give you a fantastic loan. Do you get the idea? It's a very small group of people. If you fit in that box, they're going to have a great interest rate, they're going to have the lowest fees, and they're also great at customer service. But I always caution people that if you go to a credit union first and you get rejected, don't take it personally because, I mean, they wouldn't touch me with a 10-foot pole because I'm self-employed. So if you can get it, it's fantastic. Just most people can't get a loan through a credit union.